morning, everyone. On behalf of Bangalore Chamber of Industry and Commerce, we invite you for a special talk by Gaurie Dwivedi on the impact of geopolitical crisis on Indian economy and business. On behalf of the Chamber and our office bearers, we express our sincere thanks to Ms. Gaurie Dwivedi for accepting our invitation to address our members on this important subject. Thank you once again, Ms. Gaurie. We also welcome all the leaders of the expert committee who have joined for this session and the participants also for logging into this exclusive meeting. I would like to now hand over to Mr. K.S. Shekhar, our president and partner, Deloitte Touch Tomatsu. Over to you, sir.
Thank you, Rupa, and thanks, Gaurie Dwivedi, for joining us. Thanks for accepting the invite. It's one of the most important topics today's present condition, impact of geopolitical crisis for Indian economy and investment. It's a great pleasure inviting you, Gaurie. And just for the benefit of the members, if I start reading Gaurie's profile, then I'll be doing only that. She'll not be able to even present it. She's one of the senior most journalists and then part of the ET Now editorial team, and also she has served in CNBC and other editorial teams. And Gaurie Devi was recommended by my good friend MRV, so definitely Gaurie will be class apart. So that we are expecting a lot from you, Gaurie, and thank you so much for accepting the invite. And this topic is what I would call geopolitical crisis. When you all came out of the COVID crisis, we thought the crisis is over, but the new crisis has engulfed the investments and the economic climate across the world. And India is significantly impacted because the fuel price has gone up, the crude metal prices are going up, and India is significantly dependent on the foreign sources for fuel and the crude metal. And therefore, it also impacted significant investment into India from the Western countries, also considering the crisis. So we would be happy to hear you, what's your views on this and what India should do. But over to you, Gaurie. Thanks a lot for having accepted the invite. I'll be on mute, Gaurie. Over to you.
Thank you so much for that, Shekharji. And I want to first of all, once again, thank BCIC for this opportunity for this wonderful discussion. And I hope I'll be able to touch upon several aspects of a very moving and a very dynamic situation that the world is right now in. Over the next 25-30 minutes, I will talk about two aspects pertaining to what's happening right now in Ukraine and Russia. One is the geopolitical aspects that come out, and second is the economic aspects. Both need to be spoken together because only then we can sort of really appreciate how fluid, dynamic, and difficult the situation could be for India, both diplomatically as well as economically. So first, just to give a sense of where the Indian government finds itself in the middle of this crisis, which is 4,000 miles away. It has a direct impact on India's relations with not just Russia, but also China, US, as well as Pakistan. So India-Pakistan relations, of course, are at another, given India's position, which is correct, that there cannot be any talks till the terror issue is sorted out by Pakistan, till it stops terror funding. But beyond that, Pakistan has the ability to create this nuisance value for India. And I will explain how Pakistan may feel that they are in a position to once again create that nuisance for India, given what is happening in Ukraine and Russia. So first, of course, is how India's relations stand to get impacted by Russia. I'm not going to repeat what we've been seeing in terms of wall-to-wall coverage for the last 10 odd days. But I'm going to just talk about how India is now going to find it challenging to navigate several aspects of this situation. First is India and Russia ties do go back a long time. And I think there is a regard for those ties, both in New Delhi as well as in Moscow. And we've seen that in terms of the process of evacuation of our students. And I think that is testimony to how both India and Russia value their bilateral ties. Of course, they're now going to be impacted given the crisis. But my sense is that after India abstained in not just one or two, but multiple votes at the UN, whether it is the General Assembly, whether it is the UNHRC, in all those meetings, India abstained, taking a clearer position than some of the other partners of America. I won't say use the word allies because India is not an ally, but partners of America. And that clarity in its position will impact both its ability to be able to navigate how the India US relations are going to change, how the US China relations are going to change, and how the US Russia relations are going to change. Now, firstly, as far as the dynamics related to economic engagement is concerned, I'm going to come to that in a bit when I talk about the overall geo-economic impact of this. But the India-Russia ties will mean probably deeper military ties. There would be probably deeper connect in terms of India's defense spending, because my sense is America will probably come out with the CATSA decision, which is for the benefit of all of us in this conversation. When India said that it's going to take the Russian weapons system, the S-400, because US has been imposing sanctions since 2014 after the Crimea annexation, US has said those sanctions come into effect immediately. The sense was that there's going to be a waiver because India is not a small little country like any other and would listen to America. And there was a sense that America would waive off those sanctions for India. But my own belief is that given how the last fortnight has shaped, America or several people and important people in the Biden administration may evaluate those CATSA sanctions seriously against India. That would probably push India to expedite more of its defense purchases from Russia, and would probably also lead to some closer engagement in terms of the immediate neighborhood for India, which is China, which is Afghanistan, which is Iran. I believe there could be some sort of a greater back channel lines of diplomacy that India may tap into, that Russia has, that India may tap into for being able to get a greater say in this region. That's my sense, and that's my reading of the present situation, which is very dynamic. Remember, America has not given any leeway for India to find itself anywhere on the high table of decision making, either in Afghanistan or, for that matter, in Iran and the entire region. India could utilize this opportunity to Russia's links to be used. That's one part as far as India. The second part I want to come to is the India-China relations. Obviously, the template that Russia has put forward is a tailor-made solution for China when it comes to Taiwan. It's a no-brainer. Just like Russia says that, Ukraine folks are just us. We have cultural ties. We were one country not so long back. There's no reason for them to turn around and have a different view than us. We are the big brother, and it makes sense for them to align with us. This is a tailor-made solution for China to evaluate how it wants to sort out the Taiwan puzzle. And they will evaluate that very seriously, probably closer to Biden's re-election, or maybe after end of this year's midterm polls, when the Democrats are expected to lose majority. There are all indications, probably things will get tighter and more difficult for Biden going forward. And that will probably be the best time for Xi Jinping to evaluate this opportunity, this possible way to reunify Taiwan with China. In that aspect, when it uses this template is geography agnostic. If it can be used for Taiwan, what stops it from being used for Arunachal Pradesh or Ladakh or any of those geographies? That the logic is it's geography agnostic. After all, Russia is using this in Ukraine. And that is where the India-China relations would once again be tested. Remember, this happened 2 years back in the Galwan Valley clash. And I want to point this out, that there was no superpower that to either reduce the tensions or actively did so. It was effectively India on its own. And if China utilizes that same template or decides to use that once again, it will again be a similar situation of India, China on their own, and China being more emboldened because it saw how the UNSC is ineffective, it saw how the UNHRC is ineffective, and it saw how the NATO and EU members all crying hoarse from the top of the rooftops and being absolutely ineffective. So all of that will further embolden China and Xi Jinping to evaluate that opportunity for Taiwan and replicate it for Arunachal as well as Ladakh. And I think that is where the India-China relations will once again be tested with major impact on trade, with major impact on India's immediate neighborhood, which is of course your Bangladesh, Sri Lanka, Nepal, the immediate neighborhood of India. All of that will stand to get impacted. Now, third aspect I want to talk about is the India-US relations. Again, it's a no-brainer how America has been completely taken aback by how India responded to the multiple votes. It just speaks ill about America's ability to really appreciate Indian foreign policy when they were taken aback, frankly. If they were actually expecting India to vote en masse along with some of the other American allies, that just speaks that they haven't been able to understand any Indian foreign policy so far. But in the backdrop of how India has responded and the fact that it's no mere coincidence that the Quad meeting was hurriedly fixed on the same day that the Indian absentations took place to send a message by America. That's how I read the situation. It was a very hurriedly called meeting. It was a very short and crisp readout, barely 2 paragraphs. And all of it was not about the Indo-Pacific. It was most certainly not about China. It involved a lot of Russia. It was a messaging that the Biden administration was trying to give to India that, you know what, we are reading what you're trying to do here. If you're not going to be coming with us like some of the other allies when it comes to our business in Europe, our business in EU, our business related to Russia, then don't expect us to come and back you when it comes to the Indo-Pacific or the Quad or your China issue. That's essentially what the American readout, the subtext should be seen as. And points out to how the entire India geopolitical challenges pertaining to China have to be Delhi on its own. It will test its relations as well as some of the other partners by how India has abstained from these multiple votes. So the India-US relations will probably see a change, and it will obviously have an impact on how Washington evaluates the potential of Quad to restrict China in Indo-Pacific. We all know that the 2 years, or the last 1.5 years, ever since the fag end of the Trump administration and last 1 year of Biden administration, there's been a lot of talk about how they want to focus on Asia, how they want to focus on Indo-Pacific, how China is their biggest worry, and how they're pulling out of other geographies because they are focusing on the Indo-Pacific and because they feel China needs to be countered. The readout of the Quad meeting 2 days back belies that foreign policy objective. And when it belies that objective, India needs to be very clear that the entire challenges that China poses in the immediate region will not be answered by Quad. All those very, for want of a better word, romantic expectations that Quad will handle China should now be tempered with some amount of reality. That's the third aspect as far as the India-US relations is concerned. And the fourth I want to come to is the India-Pakistan relation. As I said, these relations have been at a nadir, given in Prime Minister Modi's policy, and rightfully so, that you cannot finance terror, you cannot fund terror, and expect us to sit on a negotiating table with you. But as I said, the Ukraine template is geography agnostic. So what is Russia trying to do here? Russia said that, we're going to do a referendum. The referendum says that everybody loves us, everybody wants to be with us, and we're going to go in and ensure that you don't join NATO. It's a very simplistic assessment I'm giving, of course. There are lots of nuances, but for the sake of simplicity and for keeping it within the time duration. So Pakistan would like to use this same template. It would say, the Pakistan occupied Kashmir area that they have, they've made some changes in terms of legislation. They'll try and do more. They'll come up with a puppet referendum, something that the Hurriyats love, by the way. Even the last time Pakistan spoke about it, it was obvious that the Hurriyats suddenly said that no referendum should be done. And a puppet referendum would be followed or could be followed by some amount of changes that could be brought in from a legislation point of view. And then Pakistan would say that, you know what, it's happening around the world. Why shouldn't we do it? Complicating matters as far as how India's position should be. Pakistan may not do it on its own, but we all know now Islamabad is a vassal state of China. Given the kind of indebtedness they have, Pakistan is one of the 8 most indebted countries to China. They have complete collapse of their governance systems. And with such deep debt, they will obviously now follow and take China's lead. If China follows this template, asks Pakistan to do it, that, you know, come up with a referendum in Pakistan occupied Kashmir, make the same noises that Russia did there. Let's see how it goes. As I said at the beginning of this conversation, that Pakistan on its own is not a big concern or a threat for India, but it's its nuisance value that makes it a headache for India. And also the collusion between Pakistan and China, that makes it a larger concern for India. So that is the aspect that Pakistan may like to follow from the Ukraine example that we are seeing there. So these are the 4 areas where I feel that that Indian diplomacy will most certainly be tested, and it complicates the ability to be able to navigate amidst the challenges that exist right now. So that's the geopolitical immediate fallouts of what is happening. Now I'm going to talk about the geo-economic impact as far as what we are seeing right now. Again, there's already been a lot of talk about how India's crude is going to be significantly impacted. How are we going to deal with our finances, given that Russia is the world's largest oil exporter? We have a fair amount of exposure to Russia, but it's not just crude alone. The present flux impacts the Indian economy in multiple ways, challenging our response and also dampening our expectations of a full-fledged recovery. It's extremely unfortunate that this crisis has come in at a time when Indian economy was looking to recover and come back to its pre-COVID levels. 2020 was devastating. 21's second wave was also brutal for India, and it took a long time for us to recover. And now there are some green shoots that are very visible. And the finance ministry and the government was quite bullish that the Indian economy would reach 8.9% in terms of growth rates for the coming financial year, that is FY23. But those numbers now look, I wouldn't use the word unachievable, because 14 months is a very long time, but they look difficult right now. They definitely look difficult. And I'll tell you why. First and foremost, of course, as far as crude is concerned, 85% of crude we import. We are one of the world's largest importer. And so if the crude price changes, it impacts us in many ways. It impacts our fiscal math. It impacts our ability to spend money on other schemes. And it also impacts our overall balance of payment situation. So the net finances of the government stand to be very significantly impacted, and also increasing some of the other headwinds, whether it is inflation, whether it's rupee, all those will be impacted because of how crude is playing out. So I'm going to then talk about some of the specifics in terms of how crude is going to impact us. One is regarding the fiscal situation. One is regarding specific companies and sectors that will be most impacted. And third is, what are the possible policy scenarios that the government has right now? Very few, but what are those? So first is, higher crude obviously weakens the rupee. It puts pressure on our current account deficit, and it increases inflation. Inflation is already at a 6%, which is significant, and it is just at the threshold of RBI's tolerance. Any more, and RBI will start reacting to inflation in terms of interest rates. But in terms of specifics, when I said 8.9% growth rate was factored in and was expected by the government for this year, it was on the basis of oil being $70 a barrel. All fiscal math that the finance minister Nirmala Sitharaman presented at the budget last month was keeping in mind that the crude would be 70 at best $75 a barrel. It is already at $115 a barrel today, and if the Russian if the sanctions on Russia, which have so far ring-fenced the oil and gas sector to some extent, if they sanction the oil and gas sector of Russia as well, then the crude could be around $150 a barrel, double of what the fiscal math that the finance minister did when she presented the budget. So that just tells the scale at which we are talking. But even from $70, we are closer to $120, which is about a good 50% jump in all the prices that have been factored in. Now, a $10 price rise per barrel impacts the CPI at 0.2%. Immediate. That's the immediate direct impact of inflation, not taking into account cascading impacts that when goods increase and the input cost increase, then there is a cascading impact on inflation as well. That hasn't been factored in. Just the direct impact is $10 rise in per barrel leads to 0.2% increase in CPI. Now, we're already $40 more. So you're talking about closer to 1% CPI rise just as a direct pass on with no indirect impact. Some of this, of course, the government will have to cushion in, and I'm going to come to that as well, that who bears the burden and how can the burden be borne. But before that, I want to then also talk about the balance of payment crisis. How much is that going to change? When India, as I said, India imports 85% of what we use. So that means that the current account deficit will obviously rise, because now we'll have to shell out far more, 50% more for the same amount of oil that we are consuming. So when you do that, then your current account deficit, which is how much you are paying as against how much you're receiving, is going to worsen. It may worsen by about 1 to 1.5% of GDP because of higher crude. So in FY22, we had about $43 billion of surplus as our current account deficit, which is very healthy, which tells the government's finances are in place, and it is cushioned against major immediate geopolitical challenges. But this may reduce, in my sense, to single digits. 43 billion would probably come down to $8 or $9 billion, in my opinion, because of the 50%, 60% rise in crude prices. If it touches $150, closer to $150, then you're talking about a 100% rise, twice of what the crude was 2 months or 3 months back. So obviously this will mean that there will be some pressure on the rupee as well. It will not be a runaway price rise the way it was in 2013 when we had a mini balance of payments sort of a crisis. But nevertheless, it will have an impact on our rupee as well. And rupee, my sense is, could weaken to about 76, 77, maybe closer to 80 to a dollar in the immediate short term. The other aspect that I want to talk about is that okay, so who bears this burden? Okay, so that is the other aspect that I wanted to talk about, that because the 800-pound gorilla in terms of our finances is the impact on crude, who is going to bear and how it will be borne and how it will impact the Indian economy, because that's the direct impact that we are seeing. So there are, again, back of the envelope calculations which suggest that if the center cuts excise duty on petrol by 5 rupees per litre, then there'll be a 0.1% decrease in CPI, which means that the $10 per barrel rise that happens, leading to a 0.2% CPI rise, can immediately be cut to half if the government cuts excise duties by 5 rupees per litre. So every 5 rupee cut in excise duty by the government slashes the impact of higher crude by half. But the catch is that every 5 rupee cut in excise duty the 60,000 crore rupees as income lost. Remember, this is an economy that is still in the recovery mode. This is the economy that is yet to reach its pre-COVID levels. And this is an economy that is really now struggling with a job and employment crisis, leading to the inability of the consumption-driven economic model to come back to its full strength. So how much can the government cut in terms of excise duty is important. And equally important is to point out and highlight that there are basic models that are conducted by economists around the world, that especially for India, that if the government cushions the price for the high crude prices, is it the best economic response? For instance, who bears the price? If the government bears the price by cutting excise duties, that's one model. Second is the companies bear the price by having higher input costs and lower bottom lines. And the third is the consumer bears the price in terms of higher petrol and diesel prices, which means impact his consumption basket. These are the three ways in which the higher crude prices have to be borne. Now, there are economic models that have been done which suggest that if the government cushions the price, it is most ineffective as compared to consumers bearing the price, which is that high petrol and diesel get passed on to consumers who are already paying about, I checked, it was 95 rupees yesterday. My sense is it's going to straight away come up to 115 rupees in Delhi for per litre petrol. So why is that supposed to be the most economically prudent manner of cushioning the blow? The reason for that is that for every increase in terms of higher crude prices, for every 1%, the government actually in expenditure is only 0.7%. Whereas, I beg your pardon, for consumers, that expenditure is only 0.7%. Whereas for the government, if it doesn't take a blow on cushioning that impact, it spends an exact 1%, which means, for instance, if 100 rupee is cushioned by the government in terms of not increasing the price, then the impact is that it will not be able to spend on expenditure services and on any social schemes. If the consumer cushions by taking that 100 rupee in terms of not having a higher price, he only spends 70 rupees on consumption. He saves that 30 rupees in terms of savings. So the expectation that if I don't pass on higher petrol prices to you, you're going to consume more, that is belied. Consumer is only spending 70% of the savings that came in terms of not having a higher price. So that is when economists feel that it's much better for the government to then not take the additional excise duty cut, because then it can spend in terms of social welfare schemes. So that's why who bears this burden is really going to be a very difficult decision. Remember, there are many moving pieces to this puzzle. There are important elections around the corner. There's a major unemployment issue that the government is dealing with. So in the backdrop of that, it's not a very politically easy decision to say that I'm going to pass on all the additional crude hike to the consumers, because I cannot afford the companies to have lower bottom line, and I cannot afford to have lesser money to spend on social welfare schemes. But as growth suffers, growth is going to suffer. And as that does, government will have to probably invest more in terms of some of these targeted schemes that have pretty much been the hallmark of its social welfare model, which has been a lot more. So my sense is the government is going to spend a lot more on Narega. It will have to spend more on specific segments, which will be in terms of targeted schemes for poor. There will be more free food, free ration that will have to be given by the government, because growth will suffer. 8.9% in these times, in the backdrop of these models, look very, very difficult. Even if you say that corporate debt to GDP levels have gone down to their 2003 levels, still I find it very difficult to believe that the government will be in a position to pass on the higher crude prices to companies in terms of high input prices. And that's the third piece I want to talk about, that how companies in specific sectors will be impacted by what's happening in the Russia-Ukraine situation. Specifically, obviously, higher crude prices mean higher input costs. It means lower bottom lines. For particular sectors like FMCG, 50% of the raw material basket actually comes from crude oil. So if you're seeing a 30% jump in crude oil, then raw material costs will be very significantly increased, impacting bottom lines. Crude oil is also a major raw material in detergent, soaps, cosmetics, impacting the whole consumption story in India, which is yet to really pick up so much. The third is cement, paint, airline, tire companies are going to be very majorly impacted by high crude, and that is where there will be some sector-specific impact that will be seen from what is happening in Russia and Ukraine. So my sense is that the next couple of quarters would be challenging for India, both from an economic point of view as well as from a diplomatic point of view. And there are no easy answers, unfortunately. As I said, there are no easy answers diplomatically. How do you wade through these choppy waters? And there are also no easy solutions when it comes to the economic impact, because on one end, you have the economy yet to recover. It is still not a consumption-driven story. It is still not a private investment-driven story. So essentially, it is back to the government. It is back to even the exports have been a laggard, which has been very disappointing, but exports haven't picked up. So it's essentially a government investment-led story so far. And for it to reach that 8.9% prediction and the forecast that the government has expected, it will really have to fire on all cylinders. How will it do so in the midst of political decisions that may be very unpopular, that no democratic government can easily digest, will be equally difficult to be able to handle. And the last thing I want to say is that as far as imports and as far as our export story is concerned, you have one of the largest impacts will be felt in terms of edible oils, food, wheat, sunflower oil. Those are specific segments that will be directly hit in the next 1 or 2 quarters, because of the sheer volumes that we trade in these specific commodities with Russia and Ukraine. And again, that will require the government to go back to its coffers and cushion some of this blow, because this blow it cannot pass on to the consumers. And again, that is where the government's coffers will be tested, will be depleted, and economic policy will probably be giving suboptimal results. So tough times ahead, choppy waters ahead, but I believe this is probably a scenario that will bring out the best in our policymakers. Thank you.
Thank you, Ms. Gaurie. We have 2-3 questions which was sent earlier, and later I will unmute the audio and video for the participants. Can I go ahead with the question for you, please?
Yes, absolutely.
What will be the impact on petroleum products, engineering services, export market? And how long will the volatility in money markets last?
Okay, so the money market volatility, I think that next month is the MPC meeting that will take place, where the RBI will decide as to how much should it allow the inflation to continue, or will it start tightening on the interest rates. My sense is that there will not be an urgent or an immediate MPC meeting in the month of March. It will take place as scheduled in April. And there the RBI will start tightening of interest rates, because as I pointed out, inflationary expectations as well as inflationary trends are making it clear that RBI will have to act. Because of that, even money markets will start seeing some immediate impact. Already the RBI is cushioning some of the blow to rupee. One can see that happening in the markets right now. And that will probably continue for a couple of weeks. But the long-term trend for the next couple of quarters does indicate that RBI will be in a position or will be forced to hike interest rates, given the impact that crude will have on inflation. That's the second question. What was the first question, if you could repeat?
What's the impact on petroleum products and engineering service export market?
Yes. Okay. So the petroleum products, 1.2% of our GDP will pay for crude oil prices to be higher. 1.2% of our GDP will just go in buying exactly the same amount of crude oil that we are consuming less at higher prices. So crude is all projections indicate that it will be upwards of $100 a barrel. There is now some consensus amongst energy analysts and global analysts that Russian oil and gas sector will not be targeted directly. At least those secondary sanctions will not come into play immediately. Because if they do, then you're not talking about $100 a barrel. Then you're talking about $150 a barrel. Then the price will immediately double, because Russia is the world's largest oil producer and oil exporter. It is the third largest oil producer. It produces gas that contributes to about 27% for the EU, 40% crude oil that EU produces is Russian crude oil. 90% of Italian gas is Russian gas. So given those extreme dependencies, there is no way that the EU as well as the American sanctions will target Russian oil and gas immediately. They will ring fence it, because it will also mean that Putin will not have that leverage that he decides to shut that oil and gas leverage overnight and cause more damage economically to both US as well as EU markets. For both these reasons, the Russian oil and gas supply will remain. And because of that, the crude will hover close to about $100 a barrel. That's the long-term impact, and the long-term expectation also that crude is not going to be sub $100 anytime in the future. Even the latest OPEC meeting that took place, there were calls for increasing production, but those calls were not satisfactorily answered. There's been no major increase in oil produced either by UAE or by Saudi Arab, indicating that things are going to be the way they are, at least in the near future, at least in the foreseeable future.
Thank you. The next question is there any pressure on the US-led NATO to provide assurances for Ukraine to defuse the crisis? And if not, what are the political compulsion for them to continue with their present position?
Okay. Can I see these questions somewhere? It's easier to read also, if you think.
Yes. I will just post this in the chat box.
Yes. There are two parts to this question. So Ukraine is not part of NATO. Ukraine is not part of the EU either. Ukraine has been promised since 2008 that it will be part or its application to be included in the NATO will be processed. But successive American administrations have been very clear that they cannot add Ukraine into NATO, because that will be just taking the war too close to Russia, and that will be inciting the kind of violence that we are anyway seeing right now. But Russia wanted written guarantees, given that in the past that these verbal assurances were made and they were not acted upon. So because of that, Russia has said that it wants a written guarantee that Ukraine will not enter NATO. That Biden administration has refused to get, and which is why we are where we are. But as far as the pressure on the US-led NATO to provide assurances for Ukraine to not join, that pressure has been there. And if Russia does achieve military victory, I don't think that will be even a matter of concern. But even now, there's been an excessive stubbornness on the part of both US as well as his US NATO allies in Europe to give that written guarantee to Moscow. And I believe they should have given, because take a step back and see that when these 14 new countries were added to NATO, how it has impacted Russia. Poland now hosts NATO missiles, which are 100 miles away, 117 kilometers away from the Russian border. So Russia says that now I have missiles which are less than 200 kilometers away targeting me. And now if I have Ukraine, which is the Russian border, if they also start hosting NATO missiles, then it is too big a security threat for Russia to not pay heed to. This pressure was there on US all along, but because there were no written guarantees given, as sought by President Putin, we are where we are in terms of the escalation. Now, second part is that if not, what are the political compulsions for them to continue with their present position? I think there are no political compulsions on the part of the US. There is a determination to isolate Russia from all ends, which is what they have been successful so far when 14 Eastern European countries have been added to the NATO. See, NATO and Warsaw Pact were two military pacts at the time of the Cold War. Warsaw Pact was the Eastern European countries, part of the Russian orbit, and NATO was the American-led military organization which had these Western European countries. After the collapse of the Soviet Union, there was very little case for NATO to exist, but they have existed. They have added former Eastern European communist countries. They've added former USSR countries, and now they've reached the doorstep of Russia. And because of this, the crisis has only escalated. But my sense is that the present position that America has, it's not going to dilute now, because if it had to dilute, it would have done so till now. And the NATO and the EU are not going to dilute from their position. I hope that answers the question.
Shall I read the next question?
Yes, please. Yes.
Is it prudent to invite FDI or to invest in them anymore?
Of course, India needs FDI more than ever before. The fact is that Fed had indicated that there will be interest rates the tapering will begin, which means that interest rates will start rising in America. To put it simply, that means that for every dollar invested in America, the returns that were there last year will increase significantly this year. That means that money that is around the world will start going back to America, because now there are higher interest rates, there is political stability, there is no volatility, money is safe. So a lot of emerging markets are likely to be facing some sort of a fund outflow, and India has also been facing that. About $9 billion of funds have left India in the last 4 months, from October to December. Till January, for 4 months, they've about $9 billion has left because this money that was in emerging markets is now going back to America as interest rates there start rising. So there will be some sort of a fund outflow that we will face, but that shouldn't stop us from inviting FDI. And how do we invest in them is a question that I'm unable to fathom. But the question really is that whether we should invite FDI or not. Of course we should, because FDI means actual expansion in the economy. These are funds that come in. These are FIIs. These are hot money that come in and go out, cause volatility, make the stock market extremely unpredictable. But FDI, on the other hand, which is foreign direct investment, actually increases the economic capacity in terms of production, manufacturing, and so on and so forth. So that really adds to our overall economic machinery, and we need FDI right now more than ever before. I've been hopeful that the government will act more on some of these measures that they've done so in the past. And I'm hoping that in the present uncertain times, there will probably be greater efforts to invite FDI into Indian economy.
The next question is the increase in US dollars, Indian rupees in last 10 days lesser than expected?
No, I think it's in line with what is expected. The RBI did some amount of management of the rupee because otherwise it would have been it would have seen a sharper depreciation. I think there was earlier 1.5, 1.8% sort of a depreciation. It increased to 2%. But in the short term, this pressure will remain. And this pressure is because we import such large amounts of crude that our rupee has to be under pressure. As I pointed out, the BOP, the balance of payment situation is still healthy. It is still positive, but it will go down to single digits. So that will indicate pressure on rupee. But I still feel that the runaway pressure that rupee faced in 2013, we are not going to see that right now. There have been some soft measures to cushion that blow, and that will continue.
Thank you. Impact on export of services, including software, will it help in balancing the increase in crude oil prices?
I can only say I hope it does, but that means that the crude oil price has risen at least 35%. Can we expect the software exports to rise 35% to cover this? That's the question. And if crude rises further, then you're talking about at least a 50 to 70% rise in crude. Are Indian software exports going to rise by 70% for the economy to cover that increase? I doubt that, but I would assume, and I would rather be on the side of hope than on the side of reality in this case.
Thank you. I'll now open up the floor for our delegates to ask few questions. We have disabled the audio and video. We request the participants to ask any question.
So is this open for all now?
Yes, please. We have Mr. Venkat Krishnan, sir.
Thanks, Rupa. Morning, Gaurie. If you look at the dependence on the economic factors, oil is obviously a major issue which you talked about. Now, with Russia being a producer of oil, crude oil, do you see the dynamics changing with Russia supporting India and insulating it from any of this war fallout?
So can you repeat the question? Your audio went away for 5 seconds. Could you repeat that,
Sorry,
please?
sir. Yeah, I'm saying that the biggest impact seems to be on the crude oil and petroleum. Russia is the biggest producer of oil as well as gas, and I would presume Iran would also be aligned with Russia. So do you see a bit of a trade block which would emerge, whereby Russia and Iran would step in and provide the needed support for any fallout due to crude inflation?
Okay, so China has been trying to do that for a while. It has been trying to because China is the world's largest consumer of oil. They've been trying to do this for some time, that get Iran and Russia on its side to negotiate for best possible terms as far as crude oil is concerned. And India, due to its very large volumes of consumption, has been tempted to evaluate that, but it hasn't met with any major success. One, because Russia is part of the OPEC plus. Even now, if you see the voting pattern, UAE hasn't supported US despite being an ally, because there are also, apart from geopolitical interests, there are also crude related economic interests that Russia and UAE are aligned in. They are members of the OPEC plus, and in the past they had a very bitter fallout because of deciding when should the production hike take place. But now I think that's in the past. Now they are together in terms of deciding global crude prices. So even if India tries, like China, to get a better deal on crude, it may not be so easy to do. Because the sanctions are at multiple levels. Payouts of sanctions also will get impacted at some point of time. It's a complicated mechanism that America has devised, despite oil and gas not being in it. But the second part is negotiating for better terms for oil looks very easy, but maybe very difficult to implement.
No, the reason for my question is that you already have an established India-Russia rupee payment mechanism. So you may not need to go through the sanctioned routes to really look at, getting the payment stream. We already have a mutual agreement on rupee payment between those two countries.
Yes.
And as you rightly
Yes.
said, the countries which are the biggest oil producers have decided to remain neutral. So this is the sense which I get, that maybe there will be a realignment on the crude area and support the countries which have been favoring or have been abstaining from the UN resolutions. The second question,
You're
sorry
right
for.
about the, yes,
Yeah,
please go
sorry
ahead.
for
Yes.
the interruption. The second point is with semiconductor being biggest impact area, because with Ukraine and Russia, they have the hold on the raw materials. That could also be a concern. Maybe with Russia coming in, we would be insulated from those impacts as well. I just wanted to take your view on this.
Interesting. You pointed out about semiconductors. Ukraine is one of the largest producers in terms of raw materials for semiconductors. And there, India is a consumer. We are not in the production chain at all. We are nowhere on the supply chain. As a consumer, we are impacted if semiconductor prices shoot up, or if production threats heighten. But the one country that is most impacted by this is China, because China right now is very much part of the semiconductor supply chain, and they have been trying to find ways to reduce the excessive dependence now on this region when it comes to semiconductor raw materials. India, unfortunately, is not a player in the production supply chain at all, and we have to brace ourselves for price hikes. Maybe this is a good time to once again evaluate the semiconductor policy. I mean, I remember I had just joined journalism when there was talk about semiconductors. That was 2005. 17 years into the profession, we're still talking about a semiconductor policy. There's no fab unit anywhere on the horizon. I hope this forces us to now act on our words. But beyond that, production supply chain will get impacted. But I see China taking more significant steps to further become a master of the entire supply chain and dictate prices like they do in some of the other segments. India, I don't see India being a player at all.
Thank you. I now request Mr. T.R. Parshuraman from TIA, and who is our immediate past president. Over to you, sir. Sir, you are on mute, sir.
Yeah, very good morning, Gaurie ji. Thank you very much for a very insightful presentation and your analysis on the current geopolitical challenges. So my question to you is, for India, I think this rupee depreciation is a great boon to some of the IT exporting companies. So what is your views on that, actually, given the current situation?
Thank you for that, Parshuramanji. Yes, depreciating rupee boon when we talk about our exports, but this is my
Somewhere we lost, I'm sorry, signal, some problems, Rupa?
I'm sorry, we lost you for a few moments.
Okay, I hope I'm more.
Yeah, you're fine now. No, again we lost you, right?
I can hear. I hope. I hope it's better now. Depreciating rupee impacts our trade. It our imports and is a great boon for our exports. But I have seen the trajectory of Indian exports since it makes us ask the question that should Indian consumers, Indian citizens be subsidizing Indian exports if there is not going to be growth of the kind that we envisage? We are all crude consumers. If the depreciating rupee helps exporters, it hurts us. And it is our duty to ask the government that why is the Indian exports lagging, and why is the Indian crude oil consumer subsidizing Indian exports if they are being so shockingly below our expectations of performance? So just the last 10 odd years, we had a stagnating export for 18 odd months. There's been very tepid recovery. And if my memory is not failing me, in 2013, we were about $310 odd billion, and till about 2018, we were roughly in that same range, 320, 325, $330 billion. Between that, we dipped, we grew, we recovered. We haven't grown. So yes, of course, the software story is different. It is the shining star in the very dismal export story. But I have as I said, I have a different opinion that should Indian crude oil consumers subsidize Indian exporters when there is such dismal performance? That's a larger question. But on the export bit, yes, I take your point that they have reason to be happy because it will obviously be better on their bottom lines.
Thanks a lot. Thank you so much.
We have one more question. Who will be the major players in rebuilding Ukraine?
It has to be the NATO allies. And if at all that rebuilding exercise can be detached from how Russia is going to play a role in Ukraine, because right now, the sense I get is that now President Putin may not just be happy with just taking Kiev or getting a puppet government like they do in Belarus. Now it's a matter of taking the whole country. And if that is the case, then rebuilding is a very secondary thing that's going to come in at a much later phase. If Russia does get the entire Ukraine under its control, as it looks like, then I don't think rebuilding of Ukraine will even matter. But if Putin is being able to come to the negotiating table and things stop the way they are, then NATO allies will definitely be the ones who will be rebuilding Ukraine. So this is at some stage, I would say this is a hypothetical question right now, because I don't know where President Putin is going to stop. And accordingly, which bloc then decides is going to play a role, because if it is Putin, then obviously NATO allies have no role to play, and rebuilding may not even be such a priority. If he is stopped in his tracks right now due to some diplomatic intervention, then the NATO allies will play a role.
Thank you. Shall we take one last question, Ms. Gaurie, if the time permits?
Yes, absolutely. Yes, absolutely.
I now would request Mr. Hegde to ask your question, sir.
Good morning. Good morning, madam. My question is about sanction. Only major economy other than China, India did not support sanction on Russia. So in this context, in the long run, if the war continues, is there any chance of India coming under sanction from international country? And if that is the case, how bad it will impact us?
So India's sanctions may be from the CATSA that may come in. Remember, after 2014, Russia implemented those sanctions, which said that anybody who's buying Russian weapon system will be put to severe economic sanctions. And India did buy S-400 weapon system. And after that, those CATSA sanctions have been put into place. Those will now kick in, I believe, after how India has voted. But beyond that, can India abstain and get a way around these sanctions? I believe, again, is a growing story. There will be efforts to be able to circumvent sanctions, but it will not be so easy. And there will be some areas where secondary sanctions, tertiary sanctions, India may have to face.
Thank you.
Thank you. On behalf of BCIC, we acknowledge the support of our member organization, Bueller, Mr. Fundermax, and Solar Group for supporting all our events for the year. And may I now request Mr. Parashuraman to sum up the session, sir. Over to you, sir.
Yeah, thanks, Rupa. First of all, I would like to sincerely thank Gaurie ji for a wonderful insight on the geopolitical crisis and the economic impact on the global scenario. First of all, I'm extremely impressed on the style and the simplicity and the way in which she brought in the big picture. Hats off to you, madam, because it's a really hottest topic, I would say. Everyone would love to know. In fact, at Bangalore Chambers, when we are all discussing a couple of weeks back, we all thought that this is a very, very important subject and we should bring some of the expert speakers to share their insight. I think you have done a commendable job, I have to say, because you brought in the kind of depth of analysis, the economic impact, and also your, eye for details. Amazing. I think we would love to have you in more of such BCIC interactions in the future. And I'm sure that today a lot of value add for all our member companies. And I'm sure people will have a lot of other questions as well. But given the constraints of time, we have to close this session. But nevertheless, it was wonderful having a session today. And we hope that we have more opportunities to interact with you in the days to come. So once again, thank you very much, and our best wishes to you in all your future endeavors. Thank you.
Thank you. Thank you very much.
Thank you so much, Parashuramanji. Thank you.
Ms. Gaurie, just a moment. Kindly stay with us. We would like to play a small thank you video. Please do stay with us.
Mr. Parashuraman, this is Dr. Padmaja from Ramaya. Good to hear you. Good to see you again. Dr. Padmaja from Ramaya Institute. We had met. You had come over to our institute. Good to see you.
My pleasure, madam.
Thank you. Thank you.
Thank you very much.
So we will send you this small memento to your destination, since we didn't have the opportunity to have the physical meeting. So our chambers will send you our small gratitude of appreciation. So on behalf of our current president, Mr. Shekhar, Dr. Ravindran, our senior vice president, and Mr. Indu Shekhar, and the entire BCIC team, once again, our sincere thanks to you. And looking forward to meeting you in the future occasions. Thank you. God bless.
Parashuramanji, thank you so much. And as I wrap this, I just take 5 seconds to tell you all that this is the book that I have written recently. It's called Blinkers Off, and it's available on Amazon. And if you deem it fit, you can pick up a copy from Amazon. It's called Blinkers Off. And
I think, Rupa, we should buy this first book in Bangalore Chambers.
Sure, sir.
And then definitely all our members can also have an access. And we can also probably put it in our the website actually. This,
Yes, sir.
Great. Thank you so much, Parashuramanji, and I hope we meet in person soon and continue.
Nice hearing you, Gaurie, and we look forward to more sessions.
I think some internet challenges. Once again, I thank all for your active participation. Have a wonderful day. God bless.
Thank you, sir.